So in chapter 4, here we're looking at the balance sheet in much more detail, looking at its structure, and then looking at the cash flow statement as well. Um, what we're looking at here, um, if you've had your basic accounting, this shouldn't really be a difficult chapter, depending on how much you remember. Um, but we're looking at how the assets, the liabilities, and the shareholder equity, how each of those are measured and presented within the balance sheet, right? And so um, the fail-safe thing to always remember is that assets equals liabilities and um, shareholder equity. Um, those assets are the current assets, those liabilities are the current liabilities, and the equity is the common stock. What we add to that would be the non-current assets. So current assets plus non-current assets equals total assets. For liabilities, we're taking current liabilities plus the long-term liabilities. That's equaling total liabilities. And for the shareholder equity, we're taking common stock and adding to that retained earnings. So that's our first part. That's a good, strong understanding of the balance sheet, which again, I'm kind of expecting you need more of a reminder than a teaching of those concepts. Um, then, after we have that presentation of the balance sheet, then we're going to look at the recognition and disclosure of contingent losses. So, contingent losses are important because it's a loss that could potentially occur, right? So, there's an uncertain outcome. And so, there's a way that we need to disclose that kind of thing, especially for investors. They would want to know what the contingent losses are. And obviously, then that's taken into account. And then this chapter concludes with a discussion of the statement of cash flows. And there we're looking at the three sources of cash. That would be operating from operations, from investing, and from financing. And so that statement of cash flows, we look at those three activities: operating, investing, and financing. Um, in terms of um, in terms of the sorry um, in terms of the how the what does the cash flow statement of cash flows, what does that tell us versus the balance sheet? For most companies, cash flows are so much more important, and they determine so much more about whether that firm will succeed or not. Is its ability to manage its cash, and that's a big thing that I want you to be able to get out of chapter 4.